we are starting now slowly with X-Space. Let's wait till our co-founder Tarmo is joining, and then I will add in the speaking rights, and then we can start. So let's wait a little bit. Sorry, my voice. I'll be on the mute. So I'm waiting now till Tarmo is joining. So I'm just using the time till Tarmo is joining. So we'll speak tonight about AI and blockchain convergence. And we'll speak about what are the winning use cases. So you see there's a lot of focus at the moment on the generative AI. So we speak about the generative AI, and we speak as well about predictive AI. So, and but most important, we are focusing on the use cases, not on some esoteric, on some very funny use cases, but on some very, very concrete use cases. So, and yeah, that's what we will speak today. But we will need our co-host, Tarmo to join in too. He will join then just in a sec. I'm just pinging him one more time. So Tarmo joined. I will make him the speaker as well. Request to speak. Approve. Okay. Hello, Tarmo. Can you hear me? No. Okay. Hello. I can hear you. I suppose you can hear me too, Tarmo.
Yes.
Okay. Let's get started. So today's topic is AI and blockchain convergence. What are the winning use cases? This is now the this is X-Space, and this is the 8th X-Space, 8th Twitter space that we are doing. And all these Twitter spaces, X-Spaces, we are doing on the topic AI and the blockchain, AI and the Web3, convergence, use cases, real use cases. So we're not speaking about some esoteric stuff. We are speaking about some very, very concrete stuff. Now, before we are starting, let's introduce ourselves, and then let's introduce as well shortly the projects on what we are working. So first, Tarmo, could you just introduce yourself? Then I introduce myself, and then we introduce the projects, and then we go into the deep dive into the topics. So Tarmo, please.
I'm a distinguished architect. I am ex-chief architect of largest Swiss banking platform. I have overall in architecture like 24 years experience and 11 years Credit Suisse, etc., etc. And PhD Max Planck by Nobel Prize winner, 4 master degrees, etc., etc. Back to you, Martin.
Okay, and myself, okay, Tarmo has 4 master degrees from different universities and 1 PhD. I have only 4 master degrees, so I don't have a PhD. But I spent as well 10 years in a Credit Suisse. And before Credit Suisse, I worked very much in the startups. And then after Credit Suisse, we created the Smart Credit, and then we created the ChainAware. So, and we have been in the Web3 sector and the crypto sector pretty long. Now, our first article, actually, that's in our Smart Credit blog. That's a Bitcoin price forecast from the year 2014. It was published then on the Swiss CFA magazine in January 2014. 2014, yes. So, have a look on our blog. Scroll a little bit down. That means on the Medium, and you will find this article.
Yeah.
And
10 years ago, Martin. Yeah.
It's 10 years ago. 10 years ago. And 2017, we made a second prediction. So after the first, it was a very interesting reaction. Then people were laughing a little bit, and so I haven't geschmunzelt. And after the second, like article that you wrote in the Swiss CFA magazine, which was published in the Swiss CFA magazine, then actually no one was laughing. So we were a little bit confused why no one is laughing now. Okay, now let's introduce now the projects as well. And Tarmo, would you say some words? Would you like to say some words about the ChainAware?
Yes, ChainAware is something very unique. It gives blockchain capabilities that blockchain has been missing all the time. It brings AI into blockchain. Fraud detection, rug pull, ad tech, AI investment funds, everything where you can benefit in blockchain. Martin, did I miss something by ChainAware?
Yes. So practically what we are doing, how did ChainAware emerged? We created first Smart Credit. It's a fixed term borrow lend platform. So we are like on top 20 on the Ethereum, but we are fixed term, fixed interest. We are not variable term, variable interest. And in a Smart Credit, we developed as well a credit scoring. But as a part of a credit scoring, we developed as well, we developed a fraud score, which was based on the AI algorithms, because you cannot have a good credit score, meaning cash flow based credit score, if your fraud score is let's say negative. So that means a fraud score overrules the credit score, but can support the credit score. So, and then we realized actually there's a pretty high demand for this kind of products on the market, like a predictive fraud detection. And then we created ChainAware. And then step by step, we are adding then new and new features into the ChainAware. And it's all about using the data that's easy on the blockchain and monetizing it and adding the features for actually what everyone needs. So that's what you're doing. And the other project is ChainAware is a spin-off of Smart Credit, fixed term borrow lend. Okay, by the TVL, we are like top 20 on the Ethereum, fixed term borrow, fixed term lend, and there as well some goodies and good new stuff is coming now. But let's dive now into the AI. Now, I think this all big, huge AI wave, it started like 16, 18 months ago. And it was all this generative AI when it emerged. And when it became a little bit more popular. Now, let's say that the generative AI emerged from the chatbots. So let's always focus like where did it came from the chatbots. But Tarmo, then how would you characterize generative AI?
It is just prediction of next probable word in a given context. You give a context and it just starts like in unconscious mind, just adding words into response. This is generative AI. It is trained when we take LLMs, large language models. It's trained on all public internet content that we have, internet content. And it just predicts the next word. And what it misses are reflective capabilities, or it has very low reflective capabilities. And it is just what is the next word in given context, and it is nowadays very, very, very highly hyped, and it's quite different than predictive AI. Martin, maybe you can say some words about predictive AI, what it is.
Oh, okay, I will add a little bit about generative AI. Okay, always let's look on the roots of something. Where did something came, and it will tell actually very much about what it is. And the generative AI, okay, on the beginning it was called very much ChatGPT. It came from the chat tools. It was automation of the chat. All this. We are not speaking of the big corporations. I mean, every Web2 company. Web1 company, they have some client interface on the web interface, and of course, earlier they were real support people now, but now this is all automated. And the ChatGPT's client is asking you a question, or potential client is asking you a question, and you will give them the most logical answer. You're just producing this most logical sequence of the words, and you give it. You give it to the
statistically based sequence of words.
Exactly, yes, because it's not logical, statistical. Now, the generative AI doesn't have no thinking. If you're asking generative AI, how come did you got to this conclusion? Generative AI cannot explain to this. Now, if you're asking a human, like a human thinking, like how did you came to this conclusion, he can explain it. The generative AI is just generating like the next sequence to this kind of prompt context where we are. That's the most statistically probable sequence, but is coming now after that. And that's how it emerged, generative AI. Oh, by the way, Tarmo, let's mention this as well. 2 weeks ago, we had a X space, a Twitter space, and it was especially focused on the generative AI use cases in Web 2 and Web 3. And let's say as well, like what was the key concept, like a key quintessence of this of a talk that we had. So the generative AI is actually perfect for the Web 2, but if you are going to Web 3, then the generative
Yes.
AI value add is
Yes.
low. And so, would you like to explain this?
Generative AI helps to automate Web 2. In Web 2, currently it is like there is tons of manual workflows, tons of manual activities. And in Web 3, we have fully digitalized systems. And in Web 2, using generative AI, we just say, take this document, compare it with following document, give output. It is something that will reduce need for humans in all these Web2 companies, and you can theoretically automate all Web2 companies to 100%. This is what you can do with Web2. It means with generative AI, Web2 will come to the same level in automation like we have today in Web3. Web3 is 100% automated. In Web2, we have automation dependent on domain, maybe 70 till 85 or 98%. And if you take now generative AI, then you can automate Web2. But what we are doing, we are talking about blockchain. Blockchain is already automated, 100% automated. And it's not so much that you can do with generative AI in blockchain. You can't do the same automations that you will do in Web2 companies because these automations.
Let me jump in. And we spoke 2 weeks ago, or we have these X spaces every 2 weeks. We have an X space. We speak about Web 2, Web 3, generative AI. And we spoke as well very much about the unit costs. Now, let's make an example. Like, okay, I think it's not a secret. You can see this from public documents. In a Credit Suisse, Tarmo and me, we both worked in a Credit Suisse in Zurich for 10 years or longer. So if you're looking at a Credit Suisse, okay, which is now UBS, okay, we're not going into this discussion why it's now UBS. That's a separated discussion. So, but you had a ratio of front employees, which are then really value adding to the back office. It was 1:8. 1:8. So that means one guy in the front is getting so much value that he will cover all the costs of these 8 guys, plus infrastructure, plus everything. And there is as well a profit remaining then for the company, for the shareholders. Now, 1:8. And the generative AI is perfect for this back office automation. But we're looking like there are support systems, help desk systems, whatever document processing systems. Like
compliance, everything what is not automated. You can replace everything what is not automated in Web2 companies with generative AI, but in Web3 it's all automated. So what am I going to do with generative AI in Web3? I haven't figured it out, Martin. Maybe there are more intelligent guys who can figure it out.
Yes, and actually Vitalik, he published when it was like 2 months ago an article about this, like an AI and blockchain. And okay, sometimes he's very good in saying things in a politically correct way. And he spoke as well about some autonomous agents for the for the generative AI and the blockchain, but this didn't sound it like a convincing, like a real use case or eventuality or maybe or so. But he emphasized very much that the real use cases for the AI, Vitalik emphasized this, these are in the predictive AI, in predicting what is next now in the data. In this, because blockchains, we have a huge amount of data which can be processed.
Public data and very accurate data, Martin. Very high quality data. And you can do very, very accurate predictions from the data that we have proof of work validated blockchain. And this data is free. We don't have to pay for it millions or billions or whatever. Just take and calculate. All you need is compute power.
Yeah, regarding this data is free. Let me just make an example. Just imagine that you go to Twitter and you're telling, hey, Twitter, I want to get access to all your feeds. I want to have all your data, like now the last 5 years. Probably you will get the price quote that you're saying like, okay, I changed my mind because the price will be too high. Now, blockchain data is there, it's free, and it's so highly predictable what is there in the chains. And Tarmo, can you explain it a little bit? Why it's so highly predictable?
It is very, very high quality data because you have to pay for transactions. And if you pay for transactions, then you do real transactions that really matter, what are important for you, and they describe your personality, your actions, how you behave. And if you go over to social networks or searches that are used for calculating intentions or behavior of people, but this data is not don't have such a high quality. In searches, your search history changes every day, and if you take social networks, and it is quality of this data is very low because it is what you think you want to be. It is not what you are. In a blockchain, we have data about what you are, what is your real self when we talk psychological terms.
And therefore, we have a very high predictability. And let me emphasize it again now. Just imagine that you want to pile Twitter data for the last 5 years. This data doesn't have so high predictability. It's a social media. You can pretend to be anyone. We know there's a lot of bots. There's a lot of wannabes who are pretending to be someone. You can be anyone on the Twitter. You can pretend to be anything, to do anything. You can be some so-called crypto influencer. Okay, that's a separated topic. We are not going on this crypto influencer topic. So, but the prediction power about your real actions on the Twitter data, okay, it exists, but it's low. Now, but if you are taking proof of work, let's say Ethereum, you're paying gas, you're paying $3 gas, you're paying $5 on the other transactions, $20 gas, and this is proof of work. And with this proof of work, because if you have to spend money, and now you are spending money, you are doing really a transaction what you need to do. But now the choice of these transactions what you are doing, because you have so many different things that you can do, but now you're paying money. And these choices that you're doing, or the graph of these choices, the path of these choices, is telling much more about your personality than people are thinking. And this is all in the blockchain. This is all there for free to analyze. Again, a comparison to Twitter. You don't want to know how much will cost the Twitter data feeds for the last 5 years? Probably.
Martin, we can say WhatsApp takeover by Zucky, it costed $19 billion. And these were real phone calls, and it just describes, and it was actually cheap. He paid per one user $35. It is very cheap. And everybody thought Zucky is a little bit out of mind. No, he was full in mind, and he knew that he bought WhatsApp like 3 times below the real price of data.
And why? Let me add it. Okay, just a question to public. Okay, you cannot answer this question. It's like it's a one way. How does Facebook generate the revenues? Very simple. We are the ad system. Facebook is actually a huge ad system where people are producing content. But now the issue being in this Facebook content, because it's a social media content, like I can create an email account and another email account. I can pretend to be a king of England. I think it's now Charles III. I'm losing the track there. Now, I can pretend to be anything. And this data is not so conclusive now. But if you're adding WhatsApp data, with this WhatsApp, you see so many real connections. And okay, and making a phone call, okay, it's not so highly predictable as it is a blockchain transaction, but it still is like a proof of work because you have to select a number, you have to speak a little bit, and so it will cost you time. So there is some proof of work, and this proof of work based like interaction, this gives much more higher predictability in the behavior as a Facebook. And Facebook, technically speaking, is an ad system. Now people are generating the content. There is as well a WhatsApp. We plug it together. And the result is a huge ad system that then Facebook is monetizing. Now that's how the Facebook generates the revenues. We are the ad system. Yeah. Well, okay, Tarmo.
based on WhatsApp data. Yeah, and in blockchain, all this data is free. All you need is compute power and understanding of predictive AI, and you get very, very accurate predictions. Or, Martin, maybe what are let's take the first case, for example, rug pull, and let's explain maybe what is rug pull and how AI can help rug pulls.
Yes. Okay. Like a rug pull. Okay. Like if some people are like investing in the early pools, actually, these are not some people. These are hundreds of thousands. These are millions. These are many millions, tens, hundreds of millions people who are investing in the early pools. And everyone can verify it, what is happening with the early pools. Like if you go on Pancake, you look on the pools which are created, and you just have to look how many of these pools when they're active are surviving, let's say, longer than 1 hour, 2 hours, 4 hours, or 5 hours. Actually, they don't. They're created, very many of them. Okay, then there's a little delay, and maybe some days later, liquidity is added, and then trading is started, and it's shooting up. And then at some point, liquidity is taken. Okay, this is one way that liquidity is removed, and liquidity removing from the pool, from the trading pool, means that everyone is losing everything. It's not like in a trading. If you go into trading, you can lose maybe, you do a lot of trades. Okay, some trade you lose 20%, other 30%, but you put some exits. Okay, maybe you lose 50%. You were not on the computer, but you have still like a part. You're losing part of the money. You still have the other part of the money. Now in rug pull, you lose everything. You lose 100%.
And you don't know which pools are going to be rug pulled or not. So it's
and
like
you don't know
casino.
It's a full casino. So you don't know which pool will be rug pulled. So okay, probably you're joining a Web3 sector. Someone is shilling there a little bit. You follow one Telegram, you follow another Twitter, some shillers. Maybe people are not so experienced. They go on these pools. They're buying on high expectations, but they're shillers. All these shiller armies. They're shilling it up, and then you have a rug pull. Boom, and people losing everything. So. And what we have is we launched it. I think it was like 2 weeks ago or 3 weeks ago. We launched Predictive Rug Pull Detector. Now, what does Predictive Rug Pull Detector do? It uses the AI, predictive AI algorithms to predict which pool will rug pull in the future. So that means we are predicting the behavior of the pool in the future. What will happen with this pool in the future? Now, I spoke about a Pancake. In a Pancake, 80% plus of the pools end up in a rug pull. Now, okay, there are two types of the rug pull. One is like that liquidity is removed. Now, there's other rug pull. It's like someone is minting like 2 trillion of tokens somehow, and he's selling these 2 trillion of tokens and again existing liquidity. Now, the result is exactly the same. The liquidity is then out of the pool. 80%, or actually more than 80%, depending on the time frames. Now we have done little tests, and so we're speaking 80 to 90% will end up on the rug pull. Yeah, and there is no way to know. So you are an early investor, you want to invest, you have 10 choices. Now 2 of them will probably not rug pull, but who are the other 8? You don't know. Yeah, Tarmo. Maybe you add.
And what we have is predictive AI. We can say which pool is going to be rug pulled. We have tested it even. We have verified it. It all works. So for investors, it is really like a solution for 5x, 8x returns, because you know you are not going to lose your money in these pools, and it is something what will, for those who know how to use it, they can generate enormous returns in very, very short time frame.
And we are giving this tool away at the moment for free. Now, of course, we could charge huge money from this, because for the investors, the impact will be huge. But let's say this is a goodwill to the crypto community. Although sometimes I'm thinking we have to put a price, because people are saying if there is no price, there's no value. So we have to put some symbolic price on this. The people have to pay a little bit, because the people who will use it, they will have a high protection. Now, let's say, just to avoid now the confusion for rug pull, there are two types of rug pull prediction. Now, one of them is so-called statistical contract analysis. This looks, for example, that there's so-called hidden taxes, or on the contract you can mint unlimited tokens, or you can do some shenanigans. So it's a proxy contract, meaning you can plug in another implementation of a contract and then fool everyone with this new implementation. This is so-called static analysis, you see. And there are tools for the static analysis. I think one or two companies are offering the tools for the static analysis. Now, the issue with the static analysis is, if you are a scammer and you are convinced that you will scam the people via these shilling armies that you want to do, you are creating a clean contract. We are creating a clean contract where the statistical EVM analysis is saying everything is good. We don't find any hidden taxes. So proxy contracts, there are 20 or 30 parameters, criteria. We don't find anything. And they say pool is the contract behind the pool is like from EVM analysis. Good. Okay, good. But we are not analyzing the EVM source code. We are analyzing transaction histories. We are looking how the patterns of transactions are happening on the blockchain. And there are some patterns which are AI identifies as fraud patterns, and there are some other patterns which are good patterns. Now let's think in this way. If you are a scammer and you create a contract, you can create a fully clean contract, although you're a scammer, but your transaction history, you cannot fake it. You have it with you, and it's there forever. So that means we are this tool for the scammers. Now, if this tool is going wide, if people are using this tool, like say at the moment it's for free, although we think you have to put a price on this because free things don't have a value, some people are saying. So, but if this tool is going wide, we are totally limiting the options of the scammers in the RAPL creation, because there'll be less and less addresses. Like if they're using certain addresses, if they're creating a pool from certain addresses, these addresses are marked bad and they're gone. And AI is analyzing the patterns
Yes,
of interaction.
and we can predict it before it happens.
Exactly, I forgot to mention. Yes, Tarmo, please.
It is before it happens, not after it happened. No, before you invest your funds, you can just check, is this pool going to do rug pull or not? If it's going to do rug pull, do you want to invest? Probably not. Or Martin, another fraudulent behavior what we see in blockchain is just fraud, and to give numbers, to give here numbers, in DeFi we have annual hackers fee or fraud fee around 2 to 3% of total value locked. And now imagine you are an investor and you want to earn money in DeFi, decentralized finance, and you learned that hackers fee is 2 or 3% per year. Oopsie.
But this hackers fee is now again like the rug pull issue. If you are an investor now, and if you invest, let's say, 5 things, and one of them is hacked, you lose usually everything. What is this? Maybe you're getting a little part. So these are not like a trading loss. I'm an investor. I'm putting now in 10 tokens. So some are going up, some are going down. So no, if it's hacked, it's a major loss. These are not like how it's called, like I don't know the English word, like probability distributions, these Gaussian curve distributions. No, these are abnormal distributions. Okay, I don't know what's the right word of this. So, and it's a fraud detection. So how to predict the fraud? How to predict which addresses will be the fraud? Now you are interacting with someone, you are interacting with influencer, you are interacting with some business partner. Just ask them for the address. Now, okay, referring to the ChainAware, in the ChainAware there's a functionality, share my wallet audit. But this is share my wallet audit. You connect your wallet, you sign it, so it's proven it's your wallet, it's not someone else's wallet. You get a unique link, really unique link, and you can share it now. And what you're sharing, on this result, we can see the predictive AI said, what is the probability you're committing the fraud? Or how much we can trust the wallet. Now, everything above 50% is trustable. Everything, okay, that's, of course, you can go more stricter and say everything above 80%. Then you're getting wallets with a very clean cash flows, very, very clean. So I mean, money in, money out, very, very clean transaction pattern. So you can go on to 50%. So it's pretty okay too. But if you go below 50%, you know, say like, oh, there is something, something a little bit fishy going. So predictive AI is saying it. So now, meaning fraud of fraud recognition, just based on the blockchain interaction patterns, predictive before it happens. Fraud detection before.
Before it happens and not after it happens, because people don't understand one thing currently in blockchain. Transactions in blockchain are irreversible. If you did send your money to a hacker's address, you can't go to the bank and say, oh, I did do wrong transaction, please revert it. You can do it in fiat system, but you can't do it in blockchain. And the point is that all forensic methods that you see currently in central exchanges or all platforms, they say, oh, we have all forensic, and these are after it happened. They can't revert it. And the only way in a blockchain is you have to stop transactions before you do it. In fiat system, you can do your transactions to fraudulent partner, you will reverse transaction later. It is how it works. But in blockchain, you can't. And the point is, what all these companies think that with forensic methods they can protect customers. No, they fool customers. They mislead customers. They promise to customers something what is wrong and what is not working in blockchain. They think that it's working in fiat, it will work in blockchain. No. And this is why by all fraudulent behavior, you have to stop it immediately. You just don't interact with these addresses, because if you sign transaction, it's too late. Yeah,
it's too late now. In the centralized finance and in a traditional finance, actually, centralized finance is a part of traditional finance. There are compliance departments. Now, if you're in the Web3, it's a predictive compliance. So there is no compliance now afterward. There is no way to reverse transactions. There's no one who's blocking the account. No, you cannot. Okay, of course, there's OFAC things and so United States, but that's a separated topic. We're not going into politics here. We're not going there. So you cannot reverse transactions, meaning you need a predictive compliance. Do I want to interact with this address? Yes or no? Now, if you're going to centralized finance, they are using these AML systems. Now, fraud detection, traditional finance, there are two methods, and they're actually written by regulator. Every bank has to use them. If you don't have both of methods, you don't have Pancake license. If you have only one method, you don't have Pancake license. You need two methods. First method is an AML compliance, like AML tracing. It's the flow of the bad funds in the system. And it's very simple. Just imagine that this algorithm, just imagine you mix the red wine with the water, now red wine being the bad money, and then how this red wine is getting diluted. Now the ratio of the red wine in any account, that's an AML score. So that's the AML score, the flow of the bad funds. And that's every bank has to do it. Now, the other method is a transaction monitoring, and transaction monitoring in 99.99999, so de facto 100%, is done via the AI. So, and every transaction incoming, every transaction not outgoing, so incoming in fiat is going through the transaction monitoring. Every transaction outgoing is going through the transaction monitoring. And maybe you have this, like things you are traveling a little bit, you take your credit card, you're from Europe, you go to New York, and they say, oh, you cannot use a credit card. Why? Because it's a little bit unusual transaction, probably your first time in New York or first time in the United States. You call your bank, say, hey, please unblock it, everything's okay. But it's a transaction monitoring. So in traditional finance, it's mandatory. You have to do it. If you don't do it, you don't have a Pancake license. If you don't have a system for this, you don't have a Pancake license. Now, if you go to centralized finance, there's an AML monitoring, there's no transaction monitoring. And they are pretending, they're saying to the regulators, actually the regulator is requesting both. Regulators requesting fraud detection via transaction monitoring, fraud detection via the AML systems. And they're saying, oh, there are no transaction monitoring based systems, so therefore let's use the AML, the AML systems. Now, but AML systems are limited because it's just the flow of the so-called red line, the bad money in the system. Yes, Tarmo, please.
Regulators are fooled, customers are fooled, and winners are just investors of forensic companies. These are winners, and but users lose with these metas because they can't reverse transactions. And to have security that you interact with a clean party, there is only one way. You have to check address before you interact. After you sign transaction, it is too late. And accuracy of predictions, for example, in ChainAware, we've got it to 99% or even higher, Martin, but then we downgraded it just to make it faster because it's computationally intensive. And this is and you saw fraud we can eliminate, rug pulls we can eliminate. It is predictive AI, and it brings trust back to the blockchain. Blockchain becomes again trustable. You can have bad actors, but why should I interact with a rug pull contract, or why should I interact with an influencer who has fraudulent behavior? No, I will not do it.
Or even further, who had a fraudulent behavior, let's say 3 years ago, he had it. And if he had it, it's there. No, he frauded once, he will fraud in the future. He frauded because he was thinking there are no tools to identify it. So he's kind of free man. He can scam, let's say, his clients or customers or someone else. So he did something he was not supposed to do because he was thinking he's above the system.
He's not, and now he has all data in blockchain public. Just take and calculate it.
Just take and calculate it. So, and you can always say to someone is pretending he's 2 years in a blockchain or 5 years. Tell him, show me your address. Show me your address. You're 2 years. You're 5 years. You're 10 years. Give me your address. Show me address. I want to see, is it really 10 years? Now, if he's not giving you this address, probably, okay, he's just a pretender. Now, if he's giving the address, just run analytics. See, how did he behave at that time when the analytics capabilities were not available? But this is telling you so much about, like, if someone is scamming you and he thinks that you cannot verify predictive because the tools are not there, versus he's scamming you when he knows that the tools are there. These are two different scenarios. So, back to the fraud detection, predictive fraud detection. And where this is automatical cleaning of a Web3 sector. So we are cleaning out the scammers. And because, look, the data, we spoke before what the Twitter data will cost. We don't know how many zeros will be there, 10 zeros, or we don't know. The blockchain data is there. It's highly predictive. And every user, like every influencer, every business, your business partner has his addresses. And all the past is with their addresses. Of course, they can create the new addresses, but then it's always the question, like, you can cluster the addresses with some algorithms. We're not going on this discussion today. The algorithms are there, so the clustering algorithms. But if someone is pretty long in a chain, tell him, give me your right address. I want to see your right address. Don't give me now some new address that you just created. You are my business partner to be business partner. Show me your right address. I will run a little analytics of this.
Yeah, prove that I can trust you. And if trust score is high, then yes, I will trust you. And it's like in normal everyday life, to build up trust, you need time, months or years or whatever, and then you make your opinion. I trust this person or I don't trust, and the same is here. And we can calculate it very fast in real time and say you can interact with him or he's a bad guy. But Martin, let's.
Oh yes, we are speaking too much about rug pull and fraud. What other use cases? We are saying, like, what are the winning use cases? What would we take as the next one?
Winning. I'm not going to trading. I'm going something what is more important than trading. It is ad tech.
Exactly. Look, we spoke about Facebook. That Facebook business case is ad tech, and that's why Facebook bought the WhatsApp, because of the ad tech. But Tarmo, please continue.
Yeah, in ad tech, what we have currently in blockchain is like 1930s. mass media marketing. You send your message to everybody. And what is happening in Web 2? In Web 2, we convert over to one-to-one marketing, intention-based marketing, where in Web 2 we calculate intentions of a user, what does the user want, and then we make a message for a user, which is one-to-one message. And what is now difference is conversion rate. If you are in mass media marketing, your conversion rate from customer seeing your ad till transacting is what is it, 0.1%. If you do one-to-one marketing with intentions in Web 2, you get to 30% conversion ratio. It is almost 300 times more transacting customers for the same dollar. And this is what can be done also in blockchain, especially because all the data is free. And
Tarmo, let me just explain to the listeners now mass marketing versus one-to-one marketing. Now, mass marketing is you want to buy a new car, you say ad, buy car, buy car, buy car. Okay, like what does it tell you? Like buy car. Now, but just imagine you have intention to buy BMW, or you have intention to buy Audi, or you have intention to buy Mercedes, or you have intention to buy Tesla, and you get this, but you have your intention, and that's what you're speaking. So the Web 2 market is intention-based marketing, and it's not mass marketing. So there's a mass marketing, everyone gets the same message. It's waste of money, it's waste of time, except only there is a one winner, and these are the marketing agencies, they will do the most of money.
Martin, we can say it here, it's all data from all investments, but Web3 companies get half goes to marketing agencies. So currently marketing agencies are
let's say marketing.
winners.
Marketing total. These are like a crypto media, like a CoinDesk and all these kind of similar platforms. They are booming with banner systems, banner ad systems. These are marketing agencies. These are the influencers. Okay, then these are the three big parties. And but now, if you're looking on a Web 2, let's think on a Web 2. Who is getting a biggest pie of the Web 2 marketing? Now, Web 3, like let's say 50% is going on the marketing. Okay. Who is getting the biggest part of this marketing? We say it's the media, it's the marketing agencies, it's the influencers. Now, in a Web 3, in a Web 2, these are the ad tech, these are the Google, these are the Facebook. Facebook is not a social media company. Facebook is an ad tech company. Look how they generate the revenues. They generate the revenues via the ad tech, not via the social media. Yeah. Okay, Tarmo, back to you.
Yeah. And if you take blockchain data, what we can do is calculate intentions. And what it brings to Web3 companies is that the conversion ratio of a potential user from seeing ad till we can convert him to transactions goes not up 8 times, but you say it goes up 300 times. And it means enormous marketing power, positive cash flow for Web3 companies, and sustainable business models, and not pumpy-dumpy business models that we have today because marketing is so expensive.
And why is marketing so expensive? Because the marketing systems are used, which are like 100 years old. Okay, of course, there's some intelligent marketing approaches. I'm not going on these intelligence ones, but I'm speaking what we see in the Web3 marketing. It's a pure mass media marketing. Now, mass media marketing means everyone gets the same message, and then they go to the shop on the Madison Avenue, and in the Madison Avenue, they have the same shopping floor. Okay, like 1930s. Now, take Amazon.com. If you go on Amazon.com, your screen on Amazon.com is different. My screen is different than Tarmo's screen. Anyone's screen is different.
Now you speak about adaptive applications.
I'm sorry. Please.
Yes, and this is what is happening in Web 2. All Web 2 converts over to adaptive applications. Gartner, this huge research organization, says 2030 25-70% of Web2 front applications are adaptive application that they adapt to the user. Is it by showing banners or is it by putting different elements on screen? It is customized to the user. It's one-to-one marketing to increase the conversion ratio, to get the customer to transact. And in Web3, customer gets to user interface. It looks like it's the same for absolutely everybody, even no banners, even no additional elements. It's the same for everybody, and then people are surprised why is the conversion ratio so small. Why are they surprised? It has to be small. If you don't match to customer intentions, you send him away. And this is how we do today marketing in Web3. It is stone time. It is very, very old and non-working techniques, but it's good for marketing companies. We have to say it, Martin, because marketing companies earn from it massively. And if it would happen that Web3 companies start using now AI-based ad tech for marketing, then these marketing agencies who earn billions of dollars per year,
they will be disintermediated.
Yes,
disintermediation, full.
Cut the man in the middle. And this is now here maybe one of the reasons why we don't see innovation in Web3 marketing, because Web3 companies don't know that it can be done in one-to-one intention-based marketing style. And on the other hand, marketing companies know if it would be done in one-to-one marketing style, nobody needs them. They were cut out from Web2 world or marketing agencies.
Yes.
They are now in Web3 world, and they are afraid that they will lose it also. So their only way is to say no, please, no one-to-one marketing in Web3. It's happening in Web2, and the bad thing is now Web3 companies, if they don't understand, they will not become cash flow positives, and they don't get big, they don't become unicorns, they don't get millions of users.
The result of this extremely high marketing budgets, let's look it from outside, let's zoom out, is Web3 companies are just burning their funds. They're burning their funds, marketing agencies are totally happy, and there's a next Web3 company, next. The market for marketing agencies is huge, and the Web3 founders are just burning their funds. Instead of using these funds smartly for the user conversion, or if someone wants to now to pump the token, okay, so be it. But okay, our recommendation always focus on the user conversion. Token is coming from itself. So
I saw numbers like 10 billion is what is annually invested from Web3 companies to marketing agencies, and
to marketing total.
To marketing.
Sorry. Yeah, kind of.
And then it is like Web3 companies are actually victims of all these marketing agencies. And what we need now to say, like in the case of fraud and rug pull, that also for Web3 companies, you can stop your role being victim. You can go over to one-to-one marketing, start building adaptive applications. We have technologies in ChainAware. You can do one-to-one based targeting. You can build adaptive applications with capabilities we offer. And it's all AI based in that it's again, we calculate intentions of a user. We calculate what the user really wants. And it's not like, oh, I saw user made a trade in Uniswap. Oh, he's a daily trader. Totally wrong. You have to really calculate what is the intention. Maybe he had to change some token to do some gaming, or I don't know what. And here you have to calculate intentions of a user. It's not like I can label a user. No, you can't. You have to calculate intentions. What does the user really want to do?
And intention is not holding a token or just exchanging a token. That's not an intention. intention is what the user really wants now. Web 2
Yes.
marketing is intention-based marketing.
And why we need intention is to get conversion ratio up to 30% like we have it in Web 2. In Web 2, when you do one-to-one marketing, your conversion ratio from showing ad till doing transactions in a Web 2 platform is 30%. And Web3 companies don't use it. Okay, we spoke about reasons why they don't do it. And but it would give enormous boost for innovation, enormous acceleration for innovation, enormous acceleration for users grow, and also adoption of our blockchain technologies. If we would bring Web3 companies over to one-to-one intention-based marketing.
And on the end, it's a question of unit cost. Actually, I remember of the unit cost we spoke in our last X-Space. It was 2 weeks ago.
Right,
the link is in our Twitter. It's a unit cost. Like the companies which will bring the unit cost of acquisition down, general unit cost they bring down, they will perform better. Now, the unit cost for the client acquisition in Web3 is horrific. Now, in a Web2, they are like very optimized, and they will get even lower the more they optimize the back office now with this generative AI. We spoke this 2 weeks ago. The lower the unit costs are going in a Web2, especially the marketing process is optimized, and now the generative AI is taking care of the back office. They get a very highly optimized. Now in a Web3, the unit costs are very high. So if you see your client acquisition costs are so high, how long will these Web3 companies survive? Now, so they will give a huge chunk of money to the Web3, marketing agencies. They are totally happy. Of course, they're totally happy. That's their business case. That's their party. Now, maybe the VCs are happy. Now, if the token are pumped, then they can dump the token. So, but the users, all the Web3, what is happening now? All this iterative process of learning, because to develop a real product, it's not like you start, you write a white paper, and then 3 months later you have it. It's an iterative process. It's a continuous learning, experimentation. The same what this OpenAI and the ChatGPT founder is speaking. That was his name. So he was speaking. So complete iteration. And now by cutting out, by forcing this extremely high marketing cost, they're cutting out this self-learning process, this continuous iterations. Because companies running out of funds, companies running out of users. And VCs are just dumping, and they will find the next trend. Whatever the next trend is, a bit NFTs or a bit RVA, or like a real world assets or whatever. They're just doing the trend, up and down. So that's what they're doing now. But the real usage.
And the usage don't rise, and the usage don't rise because customer acquisition costs are so high, and founders of Web3 companies know, customer acquisition costs are so high. I'm not gonna get to a sustainable cash flow, so I better do pump, and then I do dump. Just rug pull, which is not over 2 hours, rug pull, which is over 1 or 2 years. And it is like founders who don't know that there is an option to do one-to-one marketing, they will consciously go over a bumpy-dumpy schemas. Yeah.
Supported by many VCs and facilitated by marketing agencies. But what we are thinking, Web3, the same will happen as a Web2. Web2 was controlled by the huge marketing agencies, initially, but now it's controlled by the ad tech. Now, the same will happen in Web3, and ad tech will bring the unit cost down, especially if they are properly integrated. And Tarmo, you just mentioned before some statistics, how much the unit costs are coming down by proper implementation of ad tech into your website.
300 times. 300 times your customer acquisition costs come down. You can acquire 300 times more customers for the same budget.
For the same money.
Yes, for the same money. This is more than enough to make a big part of Web3 companies cash flow positive, so that they don't have to do bumpy-dumpy schemas. and then we will have a Web3 adoption in a mass scale. And what you see in all these cases, what we speak, we discuss, Martin, rug pull, fraud, attack, it's all by including predictive AI into blockchain, we can bring blockchain back to profitability. We can clean up blockchain for fraudsters. We can bring Web3 companies back to growth and positive cash flows. And it means even more innovation in Web3. So AI is like rescuer of all this enabler of all blockchain. It's giving blockchain back the spirit. And predictive AI.
Predictive AI. Yes, from one side, the rug pulls, these are for investors. The frauds, these are general users. Now, AdTech, this is for Web3 companies. And it cleans the sector because there are interaction patterns. And these interaction sets are used either to clean the sector or to predict the behavior of the user behavior. Web3 needs the users, and we need one-to-one target. We need intention-based targeting. We have to bring the unit costs down, because if the unit costs are not down, the Web3 companies will not survive. They're forced to go on the pump and dump. So you cannot criticize them. There's no other way. But it's so interesting, Tarmo. Today we are speaking of these 3 use cases, and each of them is like for different segments. We spoke rug pull, investors, then fraud, okay, like a general fraud for the general users, like with whom I'm interacting. AdTech is
for founders.
Yeah, for Web3 platforms. Okay, I think, Tarmo, we can speak 10 minutes longer than by 65 minutes. We want always to stay in 60 minutes. Let's say, do we have more predictive AI use cases, like a high value predictive winning use cases?
Yes, and very, it is classical trading. And you can do low latency trading. You can go to Zug in Switzerland, to the city Zug, buy a computer close to Bitfinex Compute Center, have a 2-meter line to Bitfinex computers, Ethernet cable, and you will be profitable. All you need is just a very low distance to Bitfinex computer, and you can do with very simple AI algorithms, really very, very simple AI algorithms. You have very good low latency results, and you guys know in Zug there are over 100 hedge funds doing nothing else than low latency trading in crypto, just around the Bitfinex computer. So this is one very simple AI case. And the second is, again, AI for medium and long-term strategies, where you use AI to trade in medium and long term. It's also profitable strategy. You just have to be here more into data science. If you go into low latency trading, it's basically about Ethernet cable length. But if you go medium long term trading, then you have to be already very, very good in data science. It's a lot of algorithmical work. But if you manage to do it, you get that then very good Sharpe ratios, very good Sortino ratios, very, very really good results, very good profitable results. These are actionable results, Martin, cases.
Maybe we can speak of the trading bots, like a trading bot, like AI-based trading bots. They're not doing like a short-term trading. This is like one use case, and there are some projects who are doing it, full respect on this, and they're giving these bots as well to the users, that users can use these bots.
Yes, again, but if you do low latency and your computer is in Zug, but you sit in Singapore and have fun, it's again, it's only way is you need a direct cable and a very short distance.
And the other AI use cases, then let's say you have a portfolio, you have like to rebalance it. Like when do you rebalance? When do you make roll? You're rolling from one asset to another asset, or when you're making
when you go short, when you go long. when you make asset, when you change asset ratios, it's
because
again
you are just not managing a trading pair. Actually, you're managing your full portfolio. So don't think on that you manage a trade. You manage a portfolio, and this is like AI. Like AI, it's just as advanced. You can of course go on the statical rules-based system, and there are many of these available. But just to make an analogy, like we spoke on fraud detection algorithms, there are these AML-based algorithms, like what all the chain analysis, DRM labs, and so the big boys are using. But they are not enough. They are only addressing one smaller subset of a sector. So you need a predictive AI then to address the whole sector. So, and it's the same in the trading pots where you go on your portfolio base, so you can make rules based ones for trading some pair, or you can use an AI. So now the difference is that AI is finding some patterns, probably which you are even not aware. So that's the role of the AI, to find the patterns and the training.
Yeah. Martin, let's try to recap what we discussed today, and what you see is that we can blockchain can massively benefit from predictive AI. And what we see, unfortunately, is that blockchain is like led into generative AI, which is actually not needed for blockchain because blockchain is already 100% digitalized or 100% automated. What blockchain needs is predictive AI to eliminate bad pools, to protect investors, to eliminate bad actors, to protect every user, to, let's say, to educate or give founders of Web3 companies options to do one-to-one intention-based marketing, so that they don't have to spend all their finances for marketing agencies, and it will clean up and accelerate Web3 industry if predictive AI comes into blockchain. And it is like help for all the blockchain. How to speed up blockchain and Web3 grow, Martin?
Yes, how to clean it up and how to speed it up. So we need from one side clean up from the scammers. Okay, total number of scammers still very high. From the rug pullers, for the fraudster, this is like one. And predictive AI is perfect from this because the blockchain patterns are there. They are there forever, and they are with you for a very long time. They are there forever with you. And if someone used some patterns long time ago, he will do this again. So people are who they are, especially if there is no governance over this, what they are doing. So rug pull and fraud detection, we are cleaning up the sector, but this is only one part. So clean up the sector is one part. Now the second part is the Web3 founders. The innovation is coming from the founders. Now, if founders are spending 50% of their budgets on the marketing, like and all marketing related activities, so it's not sustainable. They have to get user acquisition costs down. They have to get the unit cost down, and this will happen exactly in the same way as it happened in Web2. That ad tech companies will take over, but not the marketing agencies. Marketing agencies are then later using the ad tech companies to create the campaign, to manage the campaigns, and do all this usual stuff. Okay, they're like the operators. They are the operators who are required then to run like a project operators. So, but back unit costs, they have to be taken down, get down. So, because this enables the growth, this enables this iterative growth, like a continuous iterative growth, a continuous iterative experimentation. Because if you don't have it, well, you will not get far. VCs will not get far, Web3 founders will not get far, and so and like and these are like okay, for one side cleaning up the sector, okay, improving the quality, improving the trust in the sector. From other side, giving the tools to the Web3 founders to grow. So okay, these are the things. And then I think we spoke these two use cases as well, like rather low latency trading, like a trading pods, low latency trading pods, and then more like on the portfolio level, higher trading things. And yeah, these are like a very concrete use cases. And the topic for today was the winning use cases. So what are the winning use cases? Now, As you saw, we are not speaking about some pixel generation or like some JPEG generation or movie generation or from ChatGPT or whatever generations. No, that's blockchain is not required for this. We don't need it. So this generation is required there where we have back offices, where we don't have any automation. That's where we have the generation. So to automate end-to-end processes, we don't need it in a blockchain. Blockchain needs predictive AI. So predictive, yeah. Okay, Tarmo, your closing statement. So I made mine.
AI will bring blockchain back to track. Predictive AI will bring blockchain back to track and grow.
Yeah. Okay then. Then let's finish the session today. So thank you for all listeners. So and if you like it, please share. So then thank you and bye. Till next time. Bye.
Thank you. Bye.